We had some developments after the close on Friday, so I wanted to make some comments about some changes in timing of some anticipated events. So these comments are after the close on Monday, January 30th. Early in January, we talked about the fact that we thought the market would move into this box here, roughly between, let's call it 1300 and 1350. And sure enough, that's where we are now. And even though we've had some type of a reversal look here, we did have a change last Friday to the daily DeMark count. We had gone to what's known as a 913, which is a pretty high probability situation relative to a possible reversal. But we got on Friday, as of the close, what's known as a recycle. And what it is you've got a 9 count, and you actually get another 9 days consecutively. And the recycle comes in with some parameters after 18 days. Well, we got it on Friday, and what it does is it recycles and really negates the current count and moves you to a different count. So it doesn't change things that much. We were on a 913. It puts us back to a 9.6, which says you need at least 7 trading days to get to a 913 again. So we're in somewhat of a similar situation here where we're still waiting for some resolution in this box here. There are some potentially bullish developments that we're going to talk about and respect as well. Some of the levels that we're watching really haven't changed, and the reason why they haven't changed, you can project upside off of this low. The market has a tendency to move in increments of about 5.6%, and then another increment of 5.6%, etc. You can do the same thing off of this low here because these pullbacks are substantial enough to make that type of projection. And doing those projections off of the right areas on these lows, the one from October and one here, the numbers that result from that come in around 1343, 1352, and 1374. What we'd like to see from a bearish perspective is if we got near these levels, we would hope that that would just be intraday, and we'd like to see the market on a closing basis migrate towards this number here, which is 1343. Just looking quickly at some bullish and bearish things that we've been thinking about and seeing. In the United States, traditional technicals look pretty good. Even our models, the CCM 8020 correction index and the bull market sustainability index in the United States are in bullish mode, which is something that we have to respect. You can obviously make a case that the numbers in the U.S. from an economic perspective have been at a minimum pretty respectable lately. We've talked in the past about central banks flooding the financial system with money and credit, and that has bullish implications. We never know when the next aid package is going to be announced, whether it be in the United States or in Europe. Anything could come from the Fed, the ECB. We've got a lot of rumblings from the IMF, so press conference risk is usually bullish, and it's something that we have to respect. We've got an election year in the United States. We've also got some elections in Europe. And obviously from a policy perspective and a Fed policy perspective, in an election year, they tend to try to make things look good economically. From a bearish perspective, we just talked about the DeMark count could go to another 913 in, let's call it 7 to 10 trading days, depending on how quickly we move up. We've also got a development where in the next 2 weeks, which would include this week, the weekly count could move to a 9, which is a sell setup. And there are some things that have to happen, but we seem to be aligned for that. And earlier this month, we had some things take place on a monthly chart that should also produce a 913. So in 7 to 10 trading days, we could be looking at a 913, a 9 sell setup, and a 913, which again warrants a little bit of patience until we see how that plays out. Global technicals don't look as good as the United States. So if you look at most foreign indices, they still look like bear markets. Regardless of what the news is coming out of Greece, we could still have negative outcomes there. When you hear about a potential deal with the creditors, that's all well and good. The problem with it is not all the creditors are represented in those negotiations and meetings. So there are some hedge funds and some third parties that may decide they don't like that deal, so they don't have to accept it necessarily. And that could put that agreement in jeopardy. You've also got Germany making some demands on Greece now to basically have the Eurozone take over their budgeting process in terms of approvals. And that's not going over real well in Greece. So there's still a chance that Greece could experience what's known as a hard default. If you read short takes, you know that the 5-year Portuguese bond just hit a new low, which means investors are concerned about the ability of Portugal to pay their bills. So probably what's going to happen is once we get some type of a resolution in Greece, then the market will probably move on to Portugal. And Portugal is already making some rumblings that they may need a second bailout. We've also got slowing growth in Europe, and a recession in Europe is only going to exacerbate the problems that we've got with too much debt. And in the United States, we had positive GDP numbers in the fourth quarter, but when you really look behind the numbers, there were a few things that we won't have going for us in Q1. One was a large percentage of the positive GDP was due to inventory restockings by businesses. So they probably won't be restocking inventories to the same degree in Q1, so that's probably going to be a drag on growth on a quarter-over-quarter basis. You also had somewhat of a unique situation with the earthquake and tsunami in Japan, where you had inventories at auto dealers were a little bit scarce there for a while, so some of the demand was pushed back into the fourth quarter, and that too is somewhat of a one-time event that could drag growth in GDP numbers in the first half of 2012. You can pause this down here in your player if you want to. This is just some blurbs about how the Fed is continuing to pump money into Europe. This gives some numbers on the ECB's massive balance sheet expansion last year. They expanded their balance sheet by $947 billion, which was an increase of 36% year over year. And what really moved the markets was 70% of this move was done in one day in late December when they gave out the 3-year low interest rate loans to banks in Europe. The Fed is also really engaging in QE behind the scenes. They're still going out and buying mortgage-backed securities and treasuries in the open market. So what they're doing is taking a piece of paper, a security, let's say, taking that off the market and pushing new cash into the market, which tends to be bullish. We've touched on this topic before. This is a chart from the Fed. This is their liquidity swaps. So this is the money that they're pumping into Europe. And the point that I just want to emphasize here, why it makes sense to have an open mind about both bullish and bearish outcomes, is this is where we are now. If you go across this axis here, to get us to a similar situation, it was Q4 in 2008. So if you look at the S&P 500, while filling and pumping the system with money ended up being bullish here, and stocks eventually went higher, this is where we are now. This is the analogy now. Stocks still took a significant leg down before they bottomed in the spring of 2009, which says that pumping the money into the system is bullish, but it may take some time for the market to react, and we could see significantly lower lows if we repeated what we saw in 2008. In terms of possible next moves, again, you can pause this and read it. For numerous reasons, including what's happening in Greece, you can make an argument that no matter what happens in Greece, that it's going to be good for Germany now. If they're able to come to an agreement with their creditors and write down a large percentage of their debt, let's say 70% of it, on a cash flow adjusted basis, that's good for Germany. If there's a hard default and all of Greece's debt is wiped out, you could make an argument that that's good for Germany as well. As far as valuations go, Europe fell a lot further than the United States did. So if you look at things like book values and assets and liabilities, Europe may be a safer place to go on the long side of the market to make a bullish play. So it's possible that if this market rebounds, and based upon what we've seen, we think that it still may. If it does, we may hedge our bets a little bit and play both sides of the fence. It's possible we may take on a long position in Germany and hold on to our small position that we have on the short side of the market and hold on to our relatively small stake in the US dollar. The recycling that we saw from DeMark counts on the S&P 500 also took place on the daily chart of gold. So you can make a case that gold could have another significant leg up here before it runs into any problems on a daily DeMark chart. So we'll also be considering and looking at the chart of gold. The material in this video has no regard to the specific investment objectives, financial situation, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or offer to buy or sell any security or any related financial instruments, nor should any of the content be taken as investment advice. Any opinions expressed in this video are subject to change without notice, and Shavako Capital Management, LLC, or CCM, is not under any obligation to update or keep current the information contained herein. CCM and its respective officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. CCM accepts no liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.